Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation desk. Welcome to this morning's market update on Thursday the 29th of October. So looking at the energy markets this morning, we've seen particularly gas prices soften. The key drivers today are, number one, significant shift up in pound sterling strength against the euro following hawkish comments by the US Fed yesterday evening. Number two, we've seen UK gas fundamentals reasonably balanced, albeit just slightly undersupplied. And number three, we've seen oil markets correct downwards a little bit following a shift up yesterday. So those are your key headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So firstly, looking at those pound sterling moves, as I said, it's come as a result of hawkish comments from the Fed yesterday. At their policy meeting, they chose to keep interest rates the same, but they did firmly suggest that a rate rise in December was back on the table. That means that the US dollar strengthened significantly against the euro, and the pound has piggybacked off the back of that relative euro weakness. Pound is now worth over 139 euros and represents a 100 pip gain day on day. Looking at the UK gas fundamentals though, as I said, we're slightly undersupplied with line pack forecasts just 2 MCM short. That comes as a result of planned field maintenance in Norway, which is curtailing production by around 30 MCM. And we've also seen a slight drop off in LNG send out, perhaps as players are eyeing slightly less deliveries through November as the Asian spot price has picked up in comparison to NBP. We have, though, relatively a comfortable picture still, with demand having dropped off from yesterday. That's partly due to lower CCGT demand, as wind generation has picked up to over 5 gigawatts. That is going to drop off through the afternoon to under 3, but will pick back up again tomorrow. We've also seen slightly lower IUK exports and continued depressed domestic demand thanks to warm temperatures. Temperature forecasts overnight were revised slightly lower for the week ahead, but they still remain a couple of degrees above seasonal normal levels, so relatively bearish. Lastly, looking at the oil markets, as I said, there was a bit of a surge yesterday as US crude inventory data came out, which showed a build, albeit just slightly less than expectation. But there was also increased demand expectations, ultimately as a result of increased refinery utilisation during a traditionally low demand season when refineries go offline for maintenance. But the US dollar strength today has brought oil prices back down to around about 48.50 on Brent. So that's a bit softer on the power and gas markets as well. That's it for today. As always, have a great day and we'll speak to you again tomorrow.